Hey traders, welcome to Charts and Coffee. Hope everyone had a great weekend. Rested up for what should be a very, very good month to come. Good meaning what? Does that mean bullish? Not necessarily. Does that mean bearish? No, I'm not particularly a bear. If you've been watching this show for any length of time, that is not a gear that I have shifted into on longer term time frames. Good meaning follow through. I mean, that's really it, right? What's a good market? What's a bad market? Good is when we have follow through, and bad is when we don't. I guess secondarily, when we don't get our fills, that can be frustrating, but it doesn't necessarily make it bad. What's made 2023 challenging at times is that lack of follow through. And it makes perfect sense as to sometimes why that might be, because ultimately what we need is clarity in the macro environment, and we have it, right? So let's jump into what we've got going on in this environment right now. Oop, what did happen there? Oh, there we go. So what do we want to do right now? We want to focus on the long side. So let's focus first on where I'm not going to be bullish. Even though the Russell busted up through the 200, I'm not going to be bullish here. There's still way too much heaviness in the KRE. This week's top tier outlook, I go into a lot of detail as to why the Dow and why the Russell may not be as good in terms of follow through as the NASDAQ and the S&P. And KRE would be a big part of that. Now, that's a heck of a candle, right? And that just reminds me, if there's a time to be bearish, December probably isn't it. Now, a lot of folks said, Rog, we've heard you say the 200 in terms of resistance in the Russell and the KRE is a level that you're looking to take advantage of. But yes, I need a setup. So let me, hey. Sorry, gang. Sorry. Carol, down, stay. Hey, easy. Hey, yo. Now get up. See, I can wrangle the dog and the markets. Oh my gosh. Here we go. I know, the dog. Okay, so, hey, girl, it's okay. Thank you. All right. So, it made your dog bark too? Oh my gosh. Yeah, I should have hit the mute, but no, she's a good girl. Yeah. Okay. Anyway, if we have German Shepherd, no, Kirk, we had one of those doggy DNA things done, and literally she's all the dogs. It was hilarious when my husband and I did one of those little swabs to see, what kind of dog you've got. She was everything. It was hilarious, the spectrum of dogs that showed up in this little creature. But no, not a shepherd. I love shepherds though. Malinois and shepherds. Yeah. All right. All right, so back to the market. So yes, clearly the pup is not a fan of the KRE either. But let me show you, for those of you that are wondering, I think this came up from Top Tier yesterday. What am I looking for? And let me show you a pattern that is going to be really helpful in your career. It's a price-based pattern. It's called a minor high and minor low, but I'm going to focus on the minor high. If you're already someone who's got the Darvis 3.0, it's an indicator that comes with many of my classes, you'll notice that we have this little arrow to tell us when the pattern is forming, not after it's triggered. I'm not a fan of lagging indicators like that. I want the choice to say, hey, the pattern is in the process of forming. Now, what do I want to do with it? And you'll see these little pink arrows. So what that is that there's a potential for a minor high. Now, I will tell you, this minor high here did trigger. It formed on the 15th. It completed by moving through the low on the 16th. It just didn't follow through immediately. And then you can see that it did. So there's the last minor high. And the confirmation candle, by the way, this kind of pattern stuff, like you might say, Rog, I've never even heard of that pattern. It's an old school pattern. I first learned about it in 9, 8? I don't it's been a long time. So anyway, so there's the indicator, but the real work starts the day after the pink appears. So here's the pink, right? Say, "Oh, Rob, do we short that?" No, no. Now we know the second candle of the 3 candles that are needed is needs to form. Now, this is going to be a terrible, terrible example of the pattern because I don't want this center candle, the number 2 candle of the minor high, to be this large. I'm probably going to be better off focusing on an inside candle, right? So this is not going to be a great example. But there's the last one we had, right? That was a short. It formed on the 15th. It confirmed on the 16th. Took a little while to follow through. Never took the high out from the 15th. Got awful close, but never took out the high. That's the validity. Gang, if you can find those patterns, now, like I said, the Darvis 3.0 automatically alerts you to them. But if you can find those patterns, they're really, really powerful. You might say, well, what about the long side, Rog? Well, I'll show you right here. Not an ideal example, but here's your little green arrow. You can see that there. And then the pattern forms on the 28th, confirmed on the 29th. But I don't like when they gap confirm. But nonetheless, that's what it looks like. That's on KRE. Now, the Russell is above the level from which the year started. So it's positive on the year, even if not by much. Once it went positive on the year, it's really not a great candidate for potential window dressing. It's not a candidate that I want to short. So I wanted to follow up on some of the questions. Okay, Rog, what are you looking for at the 200? What are you looking for in terms of confirmation? And that's really a great example there. All right, so the dog got very excited about that. Oh my gosh. Yeah, sorry. I got everyone's dog. Yeah, she lost. She usually doesn't get that upset. Oh, now I know what it is because my mom's out there tending to the garden and this one got overprotective. I was wondering why she lost her mind when the pool guy got here. Anyway, yeah, she is pure mutt. As we like to say here in the house, she is all the dogs. All right, so let's get to some questions here, and actually, let's do this. I don't see any questions yet. All right, so S&P. Let's start with the S&P and the Nas. I said these are preferable in terms of where I want to be looking to the long side. Now, gang, I would hope this is obvious, but I guess it may not be. Just because a trader or an analyst or whomever is bullish, it doesn't mean they're buying. Bullish and buying are not synonymous, right? The act of buying should be when I'm already bullish. Bullish is the basically the environment in which I'm looking for the long position. So in my mind, if I'm bullish, then I'm looking for a buy entry. So it's the precursor to a buy. And so then once I'm bullish, I can start looking for support to buy off of. I can start looking for buy triggers. I can start looking for buy confirmation, right? The most important thing on this chart to keep me bullish is the thing that we got on November 22nd, and that is the confirmation of the uptrend. So the candle itself, the 22nd, there's nothing remarkable about that candle. Not really. It punched up to a slightly higher high. It had a slightly higher low, but nothing we had not seen in the rally that we had since, say, Halloween. So what made that candle on the 22nd such an important candle on this chart with my indicators? Because that was the second candle that my multi-trend, the lower row of the colors, went green. Now, the 4 moving averages that I like to focus on for a long position, for a long environment, it was met. That criteria was met. And now it's nothing but buys. Doesn't mean that I'm buying every day. Doesn't mean that bullish and buying. And I get this a lot. Traders perceive a bullish trader simply buying every day. Oh gosh, no. Right? So now what? Now that I've got the requirement and it's still green, now what? Okay, Rog, where are you going to buy? Very similar to what it looked like on the 20th. I want price to sink into the gray zone of my daily price movement range. Now, I know a lot of you picked up the DPMRs when we had that gonzo sale. So now you've got the gray and the gold zones on your chart. Now, if you're just using just brand new to the daily price movement range, go ahead and feel free to turn off the standard deviations. That's the two lines above the gold zone, the two lines below the gray zone. Feel free to turn those off for now. And then when you get visually more comfortable, I don't want any of these tools to be overwhelming. So go ahead and turn those off until you want to use them. But ultimately, what we want to remember is that this is an environment where if we sink down into that gray zone, I can buy. So I'm not buying at new highs. I don't hate my money that much. I don't hate my money at all. I'm not going to buy at new highs. I'm not even going to buy when we pull back, right? What's a pullback? That's very subjective. I need a move to a support zone. And in that support zone like this, I'd like to start finding opportunities to get long calls or maybe long the MES or the ES itself. All right. So those are things to keep in mind. And along those lines, Fabian asks, what are the two shadowed boxes you have over your chart, the gray and the green? The gray and the green. Oh, well, gray and green. Well, the green are the hourly price movement ranges, right? So there's the green and the red. When those two are together, the red is resistance, the green is support. So that's the hourly price movement range. It's just funny, you pick colors from both. All right. I guess that yellow can look green on some monitors, I suppose. All right. So the gold and the gray, which is on the daily time frame, Fabian. Yeah, I'm not sure what it looks like on your end. But the gold and the gray, those are the daily price movement ranges. And for those of you wondering, Raghee did the same thing. Oh, they are absolutely not. The reason for the different colors is the logic tree behind hourly price movement ranges is rooted in the hourly 9 to 10, 10 to 11, 11 to 12 characteristics. The daily price movement range, like the name suggests, is rooted in the day to day to day characteristics. So rather than looking at, and by the way, there's another layer of breaking down the data. We can discuss that some other time, but hourly price movement range is just like the name suggests, is the study of each hour of the day versus daily price movement range, where it's a study of each day and its volatility. And I put the daily price movement range not only on the daily, that makes sense, right? But also on the 1 hour chart. So that's the daily price. Those are the ones. Okay, cool. But the green ones, to your point, those are the hourly, and the green and red and the golden and gray are the daily, and they are completely different. All right. And different in terms of not the logic of the algorithm, but the data that's curated to run it. All right. So by the way, the same way that I described the conditions under which I would buy the S&P, that's the same thing for the NASDAQ. That's the same thing I'm going to be waiting for, that move to the downside to get long. And by the way, as long as I'm looking at the NASDAQ, let's go take a look at the Magnificent Seven, shall we? Now, why are they so magnificent? They're not really. And not all of them are magnificent, to be quite frank. On the daily time frame, Apple is in an uptrend. Apple is heavily weighted within the NASDAQ and the XLK sector. And then you've got Microsoft. So Microsoft and Apple are really important. They move the NASDAQ together. They move the XLK together. Very obviously important stocks to be in uptrends if the NASDAQ is going to continue. We go over to consumer discretionary. This is where the wheels start to fall off the wagon. Not because of Meta. Meta is very much a buy the dippable stock. But as we get into the Magnificent Seven, Google, not so magnificent. It does not have a trend. And as much as Meta is heavier weighted within the XLC, Google is heavily weighted too, but it's not in a trend. We have the same thing with consumer discretionary, where Amazon is all sorts of tall and awesome, moving higher, and it has the green structure, but not so magnificent is Tesla. So there's two stocks that I'm absolutely, completely 0% interested in buying. One is that Google within the XLC. The other is Tesla. If we're actually going to operate with relative outperformance in mind, those two won't be at the top of the list. Now, could they continue to rise with the tide? Sure. But relative outperformance says, what's the best example of an uptrend that I could buy the dip of? What's the best example of a downtrend that I could short the rip of? By the way, NVIDIA, perfectly magnificent, pulling back. So when you think about the seven, be very cautious about Google, be very cautious about Tesla. They're going to be volatile. They're generally going to move with the other names to the upside, but not in as organized a fashion. Because remember what I said earlier, what makes for good trades? It's the follow through, gang. It's the follow through. Fills are part of the equation, but follow through is how we get paid. All right. So let's see here. So I want to focus on buying the dip. And by the way, I get a lot of this too. Folks asking me, where is the S&P or the NASDAQ going to exhaust? You know, my first inclination is to say, who cares, right? Why would I be concerned about where a ceiling is in an uptrend? There's only one reason, for a target, right? But a lot of traders think that once a market's moving higher, that some of the opportunities are in those exhaustive moves to the downside. That's a lot of work. To me, anyway, that's a lot of work. So what I have found throughout my career is, if this is the way the river is floating, I'm not going to hop into the river, try to swim upriver for a little while, and then hop back on the bank and then do it again. A lot of traders trade that way. They see the river just roaring one way, and they want to hop in the river, swim upstream, find the bank, jump in the river, and do it again. Why not just go with the flow? And that's really the description of my entire trading career, whether that be a 5-minute time frame and 1 hour time frame, a daily or a weekly. So if the overall flow is up, why not wait for a pullback and then let the river do all the work? A lot of traders tend to think that finding highs in an uptrend is the way they want to trade. And who am I to say yes or no? But gang, that's exhausting. That's like running up the down escalator. And I suppose we can all do whatever it is we want with our money. But I'll tell you, letting the market do the heavy lifting is going to be far, far easier in the long run. And I can tell you that only because I've tried both. And one literally is exhausting, and the other one just lets the market do what it's doing. The trick is, and it's not even a trick, the prerequisite is, make sure you find an index, a stock, a sector, preferably all three in alignment, that are all doing the same thing. So NASDAQ has confirmation from the sectors, those sectors and those magnificent seven. So if I can go green, green, green from top to bottom, from index to sector to stock, that's going to be the follow through, gang. I bring up the Dow because I'm not bearish the Dow. I don't want to short it, but I do realize the Dow has a few things going against it that the S&P and the NASDAQ really don't. They have two nagging problems here. One is energy, and the other is healthcare. And energy really isn't in any way something the NASDAQ is going to lose sleep about. And it's not super important to the S&P, although it's nice if energies are moving higher, but it's much more important to the Dow. So while the Dow has strength in a number of its sectors, energy and healthcare are kind of slowing it down. But Dow is by the dip, gang. So whether that be DIA or YM futures or the MYM, Dow is a by the dip environment. All right, gang, that's a wrap for Charts and Coffee to kick off the week. This week in Top Tier Outlook, by the way, if you've been wanting a deep dive into how I like to trade earnings, we don't prepare for earnings the day before, the week before, not at all. That's not the way we do it. 642 says, hey, what earnings are coming up around 6 weeks from now? Would you believe that we're not too far from talking about financials being released, which is kind of widely accepted as the beginning of earnings season? Now is the time to prepare for earnings season. In this week's Top Tier Outlook, you're going to find my listing, what we're looking for, why we're looking for it, and why understanding what stocks will be primed for earnings season are also going to be primed for the window dressing that we will see this month. That's the tendency anyway. I'll see you all tomorrow, same time, same station. Be good to each other.